of the Just Swing It podcast. I'm joined as normal by John and Fat Baby, but we got a special guest on today. We have the finance hippie on to talk, obviously, the stock market, but we're going to talk some real estate. I know he's looking to get into that. And then we're going to sit back and relax while him and Fat Baby duels it out over Bitcoin because I could care less. And, I need a little excitement in my life as well. But how are you guys doing? And welcome to the show, Hippy.
What is up, everyone? Happy to be here. Thanks for bringing me on. Happy to talk about all things money. The Bitcoin conversation should be funny.
Yeah, we'll see. So I will preface it. We'll get to that a little bit later. Fat Baby did buy Bitcoin when it was like $1,000 or something. So
yeah,
it's going to be hard to beat him in the conversation because he's done made a fortune.
Yeah, you just gotta follow the cash on that one to see who's right.
Well, again, we'll get into it a little bit, but Hippy also shorted it at like 60 something, so he's not doing too bad as well.
Yeah, that's true.
But welcome to the show. How's vacation? You're kind of on a vacation, right, in New York?
So I'm actually back in Colorado, but
well, that was fast. When we talked about this, she was like, "Oh yeah, the East Coast is fine. I'll be on the East Coast."
I was out there for a month, man. I listed my house on Airbnb, and I've done it before. I made sure that somebody was going to take it for at least 21, 25 days or something. They booked it for a full month. $5,000 right there. So I'm like, all right, fuck it. I booked my flight the same exact days that they booked it. Pretty much got a free vacation out of it, and
and that's awesome.
Yeah. Do you do that pretty often?
I haven't done it in a while. When I first bought my house, I bought something a little bit nicer. I could afford it, but more than I needed. But either way, to compensate, to justify my purchase, I used to go camping every weekend. I have this rooftop tent in my car, and I would rent it out on like the weekends, make $600 or so in any given weekend, and then just go camping. So it was, pretty good. But you get tired of doing that, especially when it's your primary, having people rent your house. I definitely love that. Yeah.
Do you have any rooms that are like blocked off when you rent your house, or do you have any like areas that you don't let them go in, or how does that work?
So when I used to do the weekend rentals, I used to block off the basement just because I have a gym down here in my office. But the only thing I block off is my garage, and then I have a couple of closets that I lock, and that's where I store my personal stuff, even like my own sheets, my own pillows, like all that stuff I don't let people use. But other than that, I kind of just let them all go. I do think what you said, like that's the way to go. Like if you could block off your room. Unfortunately, with me, like my bedroom has this like nice balcony that comes off of it, and you're looking at the mountains, so that's part of the appeal. So it's hard to like block that off and still get the full amount.
For sure. Now, do you So okay, that's interesting because I know we've rented a few Airbnbs and they've blocked off certain rooms. Do you have like a cleaning lady that will come and clean up, or do you do that yourself, or what's your thoughts on that?
Yeah, so honestly, I would definitely recommend the cleaning lady. I do not, just because I guess I'm a little cheap and I'm just trying to save money. But yeah, coming back from a 30-day trip and coming woke up early, flew from New York to here. You're exhausted. The last thing you want to do is clean. So coming back home, and then my house just kind of wasn't in terrible shape or anything, but still, you have to like clean everything before you could even relax. It's pretty terrible. So next time if I do it again, I'll fork out the $200 or whatever it is to get the cleaning lady. But this time around, I did not.
And I guess it would make sense, for like if you're gone a month, the means kind of justify themselves as far as like the cleaning expenses. If you're gone a weekend, it's probably not that big of a deal to clean yourself anyhow.
Yeah, absolutely.
But yeah. So what do you do anything as a day job? I guess we've talked before. So you're a financial analyst. What does that really entail? What's kind of your daily routine or responsibilities?
Yeah, so I got lucky. I got a job earlier in the year, and it's mostly I haven't even been to the office. It's like an hour from my house. So the way we signed up, like they told me I could be remote maybe once a month go in, but all the COVID shit going on, I haven't even been in yet. I do a lot of like, financial analyst and create a lot of visualizations. I'm trying to get more into business intelligence and doing that type of stuff. But I'm not there, quite yet, but just creating a lot of reports and graphing data and just kind of trying to create more profit for the company pretty much.
Is that kind of what you've always done, or did you have a different career before this, or how'd you get into this?
Yeah, it's I have a degree in economics, and then
From where'd you go to school?
SUNY Albany in New York, state school.
Okay, I got you.
And then yeah, I mean, previous the job before I had this, I was an operations manager. I worked. It was a pretty cool company. They did handle like M&A. We did what's it called? Like we did a lot of like law in like shareholder services, but we also made payments for the companies. So it was cool doing different deals. Like we did some deals with Spotify. I know me and Fat Baby love Spotify. And so it's kind of interesting just working with that and looking at all the shareholders and paying them and analyzing the cap tables and just making sure the process goes smoothly. But I honestly hated being a manager. It just wasn't for me. I just fool around too much, and having to motivate people is just, it kind of sucks. Like I rather just do what I have to do and not have to worry about keeping people in check and worrying about when they're taking vacations and all that. But it was good experience there, and I'm pretty good with Excel, so like I automated a lot of processes and kind of helped me get to where I am now.
Yeah, speaking of Excel, John's been he's been pretty busy at it. You created over the weekend some sort of model, right?
Yeah. So over the weekend, I recently made a futures trading platform inside of Excel. So the data provider, you can pull data in from Rhythmic into Excel, and then you can manipulate the data however you want. So I made buttons that attach to macros and made my formulas on separate sheets and made an interface on one sheet. So it made trading futures a little easier because some of the platforms are pretty crazy. So I'm going to start offering that as a template and sell that to people for a few bucks or something. This is something I kind of made for fun, but might as well sell it if I'm going to put that time into it.
Nice.
Did you use like VBA in the background to code it all, or were you just recording the macros?
I mainly just recorded the macros. There was some editing I had to end up doing on the, what'd you call it, the VB? I don't even know the name of it, but I had to go into that and type a couple lines. So I had to do a couple YouTube searches. I have pretty wide gaps when it comes to that stuff. I just, as I need information, I try to search it and find what I need for each task. But I've been getting better with it. But I might be able to share a picture of it or the thing with you guys to see later.
Nice.
Yeah, cool. So Finance Hippy, your job's built around finance and the market. So you're pretty in tune with what's going on. I would say at most times. What would you say your investing or trading style is? What kind of things do you look at in your personal, not outside your job, when you're looking to invest in some things?
It's definitely changed over the years. When I first started, I just like companies like Waste Management. That was one of the first stocks I've ever bought. I didn't really know much. I just figured trash isn't going anywhere. It just kind of it seemed boring enough, so I went with that. Then when I went off to college, this was in 06, I bought some index funds. I was working at a restaurant. I saved up, I think, around 12 grand. I bought 3 index funds. I graduated college with less money. So I was like, fuck index funds. I'm like, I could do better than that. Like I literally spent 4 years, granted, if I would have been putting money in every month or whatever, that would have been a different story. But putting it in the top and then going through that recession, it was pretty terrible. So from there, I just started buying simple businesses. I'm big, I have similar ideology as Warren Buffett. I do, obviously I talk about Visa and MasterCard a lot, Google. One of the first stocks that was more risky, WebMD. Back in the day, I remember, reading that they lost a lot of advertisers because of something was going on, and the share price dropped, in half. And I knew a lot about like the internet. I'm like, all right, they're literally growing users, but they've lost a few advertisers, so they lost some revenue temporarily. That's a short-term problem, So I took advantage of it. It went down a little more. I kept buying, and within the next year, it shot right back up, and I got out of it. But unfortunately, when it comes to like buying stocks like that, it's hard to get the data. It's hard to get the true stats of what's going on to make a true educated investment decision. And I've definitely been burned a few times. So I've kind of got away from those type of companies, and I stick with some of the, larger companies that, I just feel safer with. I'm kind of sick of losing money. I have been, buying more ETFs and all that. But I'll always love at least owning, a good amount of stocks too.
I got you. Do you look at the finances, the financial information, or what all are you normally, digging in when you're looking at these companies?
So I kind of set some boundaries for myself. When I'm looking at a company, I always want to see increasing revenue, year over year, increasing revenue. If I don't see that, I usually stay away. I like to see increasing margins. If I don't understand what's going on with their earnings, if they're not making profit, I usually kind of stay away. If the PE is too high, I'll probably only be in there for a short time, do some swing trading.
What's too high for you?
It definitely depends on the company. I could do the 30s. Once it starts going above 40 or 50, I start to, it makes me uneasy, especially some of these, high flying tech companies. So a lot of them don't even have earnings, so you can't even look at that. It's just kind of a crapshoot. But every now and then I do some swing trades just for fun. I usually do that in my IRA, so I don't have to worry about the taxes. I've been lucky the past few years, but lately I've been getting burned with my DraftKings and my Penn. I feel like you might have some of those.
Yeah, I have both of them. They're not doing so hot, but when I invested in those wasn't for today or tomorrow or this year. That's way out in the future. Actually, not that big into I don't like DraftKings all that much, but to try to diversify in the space, I have some DraftKings. I think Penn is substantially better than DraftKings.
See, yeah. I like DraftKings.
The problem
they've got the NFTs too. So
yeah, but the problem with DraftKings is I feel like their business structure, as far as they've dug themselves such a hole that we're years before they can dig out of their hole. Whereas Penn is showing profits currently.
Yeah, and DraftKings is funny. Their CEO says some stupid stuff sometimes. The other day he said, "We don't want players on DraftKings who are trying to make money."
Well, yeah, he wants dumb people. To be honest, I think that's the one hole. I think that's the one issue where is for Penn. Here's one of the negatives. I think is I never see Penn or like the Barstool Sportsbook as a book where large sports bettors, like large professional gamblers, will go and place bets. It's all going to be your average standard person, that's betting $20 or even 100, 500, 1,000, whatever. There'll be people like that, but I don't see them, at least right now, getting the bettors who are betting, $100,000 or $50,000 on a game. That's really not their target, which, that takes a lot of money out when you're looking to have quantity over quality. So that's the one thing I think it's going to be hard to pull some of them more experienced bettors from places like Caesars and MGM and stuff like that.
So, Finance Hippie, do you gamble any whatsoever?
No, I honestly, I hate gambling, but I used to play, fantasy football. Over the past few years, I kind of got away from just, just got away from it. But when I did play, I was always, I always made top three. It was addicting, and I really, I focused. So that's why I know the value, and I know how into, fantasy sports people get. That is definitely a market there, and it's still in its infancy. As Chris was saying, it's a long term. It's going to be, it's only going up from here. And I love Penn just because I feel like DraftKings and some of these other companies, there's such a high acquisition cost. I don't have the data, but they're always running promotions and doing whatever they can to get customers, but it eats into all their profits. Whereas at least with Penn, you have Dave Portnoy and they're going to in Barstools, and they're always going to be, there's so much free advertising in that I think there's a lot of value there.
Yeah, I think the media side of Penn, to Chris's point, he talks about this a lot, and you could probably
it's almost zero. Their advertising is close. It's almost zero. In business terms, their advertising is zero.
Today's terms. I mean, the way things are structured today, I just feel like that's such a smarter way to go. Everybody's moving online, and they seem very strong in the space. And I think that is one really good strong point for Penn.
And they have stuff like DraftKings as well. I mean, they have a bowl game coming up. One of the college football bowl games is the Arizona Bowl. They sponsored that one. They're doing the broadcast and everything. So,
but you said they are profitable for.
They've already turned the profit.
Wasn't that like within the last year or so?
Last August, I think. I think their PE is probably like 20 something or 30 something. It's not that high for a growth stock.
They have
for a growth stock, their PE is pretty small, because I would say Penn's a growth stock, not like it's definitely a growth stock
in the space as time goes, right? I
mean, because there's only, I don't know the exact number. There's probably only like 10 states where it's even legalized, and then. I think this is one of the crazy things. I think Dave offered Barstool to DraftKings, and they couldn't get a deal worked out. So
because they could have money to buy them.
It was just like I forget. I mean, he talked about it on one of his podcast things, but I don't remember exactly what happened. But they were trying to work out a deal. If that would have happened, DraftKings would have been in a pretty good spot. I think it was part of the goals, right? Like I said, I think DraftKings looking to spend a lot of money now rather than hoping that they're the most popular one. So in the future they're going to make all that back because everyone will be using DraftKings.
But they probably paid more for Levitard, didn't they? Buy Levitard?
Yeah, but that was
for Portnoy.
Yeah, but that was after the fact, right? So I think the Penn deal was before that. So Penn's Barstool set the market, and then DraftKings, they were trying to follow that, and then I think they got stuck a little too. Dan Levitard's not worth what DraftKings gave him. So what was it, like $50-60 million for like one show, basically?
Yeah, I don't know. It's crazy. DraftKings throws around money like there's no tomorrow.
Yes, so Penn, I think Penn bought Barstool for like $400 million. The whole company, not just I guess the Chernin Group owns like a small portion still, but mostly bought the company. I don't know. We talk about Penn a lot on here. I have pretty strong feelings on it, but and I've used I've used a lot of the apps. I've checked out most of them. DraftKings, I would say, is the worst of the apps.
Oh,
I think FanDuel's FanDuel's the best. I think the Caesars one is right there. Barstool's has a little bit work, but it just started not long ago at all. I think it just opened in Virginia this past fall. So they're not even in a lot of states.
This conversation with something.
Go for it.
So in the terms of gambling, so my thoughts are gambling is something where it's the odds are not in your favor, or the probability where the odds are not in your favor, and it is just up to random chance if you make any money. I kind of set that aside from sports gambling and even poker to an extent, because there are people that are professionals and can do it for a living. So and they might be outliers that are just by chance, but when you see people in the space that have done it long term, I think the law of large numbers have already played out for the most part for those individuals that's been in the industry for a long time and been able to establish a career from doing that full time. So I kind of think that that's not gambling. To an extent, I think some people it would be because they don't invest their skills or develop a skill to be able to make money. So I know Chris, uh, you bet on different sports and things, and I know you just said finance hippie. You're not really big on gambling, but I would like to know your thoughts on what I just said as far as like what is gambling to you, and then what do you feel about people like in general, not that we're giving financial advice to anybody, but what do you feel like for the average person that's out there as far as gambling goes, just in general? Um, I'm guessing you would say most people need to stay away from it, but what about the things that where the odds or probabilities could be in your favor if you develop the skill? So what's your thoughts on that, finance hippie? And then we'll get Chris's perspective from someone that is currently in the space.
Yeah. So, I mean, you do bring up a great point, and it's definitely a spectrum of gambling, right? I mean, investing to a certain point is gambling. And I remember Chris, I believe it was Chris, or could have been you, I talked to one time where you guys were mentioning about like sports gambling, and you kind of go on different platforms, and there's a whole system in place. So you know what you're doing. It's not just blind gambling. So there's definitely, levels. I have a good friend that played poker, somewhat professionally, that did good. And as you said, if they're able to create consistent results, it's hard to argue against that. My concerns there is like you could do really good, and then you make that one big bet where you bet everything, and then you lose it all in one shot. So as long as you kind of have a strategy, and you don't, even though it's tempting to go all in, sometimes you gotta just, show constraint. I don't think there's anything wrong with it, but you just gotta know what's the difference between straight gambling and, when you're kind of what you're talking about, where you're able to improve your odds. The thing about improving your odds is it's a numbers game, and you have to, do it enough where you have that scale, and you're able to to make the numbers work in your favor, not just here and there.
Yeah, for sure. And you made a good point too about the stock market is some people treat it like gambling. So there is a fine line there between gambling and finance. Chris is the one that mostly does the betting. So I know we've talked about it a little bit before, Chris, but what's your thoughts now that you've been in the space for a little bit?
So yeah, like you said, I wouldn't consider sports gambling gambling. Gambling is playing cards where anything, even poker, for example, you don't know what cards you're going to get. I mean,
Yeah.
sports wise, you have the metrics. You can compare, like Finance Hippie said, it's all a numbers game. You can compare the numbers to each other for the teams, but even outside of that, you don't, to be good at sports gambling, you don't really have to know anything about sports, right? I mean, the same way there's strategies in stock trading where you don't have to like really look at finances to be decent at trading short term. Now you do to be able to be a good long term investor, but there's metrics you can use, and it's about using what's available to you. One of the things that's different in sports gambling, I feel like, than like say playing blackjack, is in sports gambling one side is going to win, right? So you can bet on any side you want. The sports book wins because they give so many different lines. They give a line on every single game, every single sport. So overall, they're going to be better than the public overall. But on individual bets, that doesn't mean they don't care whether that one wins or that one wins, unless it's like the Super Bowl or something where every single person's betting
Right.
on,
Is
on
on
a
it
side.
now.
And they give you so they give you a spread, right? And you got to be able to look at it, and it's not about betting. So sports gambling is not about betting teams, really. It's about betting what numbers are available to you. So like you got to be able to, do some math. Say it spreads at like opened at like -3, and then everyone bet, the favorites where, the favorite that was given 3 points, and now the line's at -5. Well, if you bet at -3, you got the value there. That means they moved it. And and mainly one of the biggest things I do, which again, I'm not a professional gambler, but I probably do better at sports gambling than I do trading, honestly. But you got to be able to look at, the people smarter than you. So I have, a subscription to an app.
It goes back to smart money and dumb money.
Yeah, we're not going to give free. We're not going to give free ads, but I get all the signals of, what percent of the money is on a team versus what percent of the bets. Just because, so say 80% of the bets are on a team, but only 50% of the money. That means there's the larger bets are on the other side, right? Because it took way more bets to get to 50% of the money.
Right.
So
there's a lot of variables
and there's different strategies. Some people's strategy is just bet on whatever side the book is on. So the book is on whatever side's opposite of the money, right?
Right.
So that's a strategy. Or the other strategy is to bet where the sharp money is, which would be in trading, kind of like, looking at the volume on certain things. And it's similar to looking at volumes. But yeah, you can bet. So certain professional gamblers, would get a designation of a sharp from sports books, right? So you can see where they're betting
position and stuff. So I know a lot of us here seems like we're pretty in depth with Excel, or I think I'm finally joining that boat. But I think if I remember correctly, Fat Baby Funds was running a model on sports betting in the past as well. Is that correct?
He was doing it on daily fantasy football.
Yeah, so I was doing like DraftKings. And
so what's your thoughts on this space? Because it sounds like all three of us have a little bit of knowledge about modeling and using Excel, and at least you and Chris have been, I wouldn't say gambling like we just talked, but definitely placing some trades.
Yeah, so what I was doing essentially was I was building mass models in the back end of Excel in something called Power Pivot, if you guys know where that is, which is just, you can essentially attach the Excel interface to a database in the back. So I was tapping into an API, downloading a bunch of basketball data. I was doing basketball DFS mostly. And then I was creating a model to say, how many assists, how many points, all the things that DraftKings is based off, how many points they were going to score. Then I was looping in things like the actual lines. So if my model said the Nuggets were going to score 104 points, but the sports book said they were going to score 108, I'd scale up my model to match the sports books, because the sports books are smarter than me. I'm building this model in 30 minutes a day. And what I was seeing is just the same people win over and over again. So I was breaking even while I was doing it, but I just couldn't spend enough time to keep doing it. But the people who win in DraftKings, they win every night. It's crazy. They're whales. They take 5% of players take 80% of the profits. Yeah, they take it from all the little people.
And that's probably true in a lot of things.
Mm-hmm. And that's why it's not really gambling for most people, because there's clearly a skill to it, because you see these people taking it, but this is their professional jobs. They have a team of people behind them. They're doing crazy things.
Yeah, so I never did daily fantasy, but Fat Baby, correct me if I'm wrong. On those, the way it works is you pay an entry into a competition. The sportsbook could care less, if you buy unlimited amount of entries. So it's not like it's minimum or a maximum of 5 or whatever. So also, the people who win can buy a bunch of entries, put a bunch of lineups, and thus, they up their chance, and they're already using, these.
Yeah, so you can do any. So most of the larger ones don't have caps. But what I was doing when I was doing it was I was playing quarter entries. So it would be maximum 100 entries. I'd be doing a quarter an entry, and I'd be uploading 100 entries at a time, just because you have to have that kind of variance to win. Just because there's still a randomness to it, where you have to, no matter what your model says, if someone sprains their ankle the first quarter, you got to have that guy's backup in a lineup in order to win. Like crazy stuff like that. If you're going after the mass entries, there's always going to be just chaos that ensues. And so that's what made it. But there are different kind of entries where you can enter 100 at a time, and then there's ones where you can only enter once. So they do set it up so like you can avoid the sharks out there. But if you're going after the big money, all the big monies is where the sharks are playing.
Gotcha.
And I guess I have one more comment on the gambling versus what's not gambling, and then we'll move back to the stock market. We went way off on a tangent here.
Yeah.
Kind of like what Finance Hippie said. One of the main parts of it is it becomes gambling if you're just betting random amounts. You really got to stick to whatever you're doing. So personally, there's a few different ways. One method is you just bet the same amount every single time, no matter what you're feeling. Like sometimes you feel better or worse about it. You should be betting the same thing every single time. Some people have like a weighted system where they may do like 1 to 3 and, put a number with how confident they feel in it. I don't do that because that, to me, that's, you can still get emotion back into that more. So I'd rather just bet exactly the same thing every single time, because you're going to win. You're going to lose some of the ones you feel great about, and you're going to win some of the ones that you don't feel as good about. So I have a unit size that I bet for, every single, whatever game I'm betting. You don't bet every single game, but any of the games I bet, I have like one unit size, and I bet the same amount every single time for all the sports. And then football is double that. So I pay a lot more attention to football. So
For sure.
my football would be double what I would on the other sports. But
So what
going
you're
back to
saying
this
basically is that you need to have a process, you need to have a strategy, and you need to be able to have discipline to execute those other two things. But everything that we just said, you can really relate to the stock market, like you're trying to do. Get back to the stock market conversation here. I think that it's really important, even people that are investing, whether they're trying to buy calls or they're trying to buy puts or whatever they're doing, it's okay to do those things and to try to execute those trades. But you need to have some kind of process, strategy, and discipline in your investing, or it might be gambling.
And to be honest, if you have a hard time, I guess, doing that, if you're, find yourself wanting to make, more trades or more bets or whatever it is, open up another account, put a little bit of money in there, and then just goof around in that account. Don't even worry about whether you're making it or not, and then stick to your process in your real one. And that takes out the urge to want to do some of that. But going back kind of to the stock market, Finance Hippie, what's your kind of outlook on the market as it stands right now? I know we had a pretty good down day today. I guess relatively speaking, it's really not down much at all compared to all-time highs. But what's your outlook? Are we we're about to go on a little downslide? Are we going to kind of go up, stay where we're at for a while with some choppiness? What's your thoughts?
Man, that's a great question. I'm mostly a bull. I think we're going to be, keep going up. Obviously, there are definitely some pocket bubbles within the market, within everything. A lot of things are dependent on this whole COVID situation. Obviously, I'm not a scientist. It sounds like this whole Omicron thing. Like if it really just gets a lot of people sick, but it's not deadly and it turns into the flu, I think we could finally just be done with this and return to normal.
Yeah, because really, if you don't die, it's not that big a deal.
No, exactly. I mean, just getting sick.
Yeah.
How many people got it? Like you deal with it. Granted, over the past couple of years, just the whole you hear the word COVID. If you get COVID or something, it's like you get a lot of paranoia, or the fear is bigger than the actual disease. Obviously, for some people, it is deadly. So I don't want to take it away from anybody suffering. But especially for younger people, it's just you can't put your life on hold for this, and people are just ready to get out there. I mean, not that they really stopped this past year. So obviously that's always overlooming. The big things that concern me really is with all the inflation and I mean, salaries are going up. Things are just happening too fast that it's hard to say what's going to happen, especially with like the real estate market. It almost seems like we just took 5 years of inflation or 5 years of real estate growth and just condensed it into 1 year, which could be fine, and that could just be, now we'll just keep going slowly. I don't necessarily think there's going to be a true crash. I'm very bullish on single family homes. I think single family homes are, they're desirable. It's still the American dream, whether it's it's not the dream for everybody, but ultimately, most people would like to live in a nice private single family home. Whereas like nowadays, yeah, they're building, but they're building a lot of, townhomes and condos and other things. So the single family home has, some more scarcity to it that are more confident in their longevity and there not being a crash. But yeah, inflation scares me. It hurts the poor. I mean, gas is double. Even though we've been through that before, and doesn't change that much. But when you go to your grocery bill is double, and materials. I've been trying to get a fence, installed for a couple months, and just supply chain issues. A lot of those like supply chain issues, they're going to be fixed. I maybe another year. I mean, some things obviously it's all dependent on COVID and a lot of things we get from China or other countries, and they have a different healthcare and sanitary and different problems than us. But once those supply chain issues get fixed, I think that's going to be huge for everyone. So yeah, I mean, all in all, I would definitely keep staying invested. I think there's no reason to get out of the market, especially for people in their 20s, 30s, even 40s. There's really no risk long term there.
Have you ever looked at hedging at all with like puts, or do you do anything like that?
Uh, I've definitely thought about it, but I honestly, for a finance guy, I don't know anything about options. I get the concept of it, but to actually do it, and when you start looking at the price of the contract and the premiums, and it's hard for me to truly make that call. I'm at heart, I'm a long-term investor. I just like buying the companies and just buying them forever. I have a few favorite companies that I'm always, putting money into. So yes and no. I'm probably never going to deal with puts or any type of options, but it is a good, if you know what you're doing, it could be good.
Yeah, and I mean, I definitely get that, because if you're a long-term investor, a lot of times with options, all you're doing is paying the person who's selling them. Like, you're just paying for the right to feel a little better as your stocks go down. But if you were never going to sell them in the first part, you don't have to worry about them going down, because you're looking 10, 20, 30 years out, and then you don't have to be worrying about all that kind of stuff.
Yeah, I never really understood the whole idea of. There's a few exceptions to hedging, but my biggest thing is like if you're going to hedge, just make your position smaller. Because like you guys just said, is after you pay the premium, you're really just. I mean, it's not like you're going to be able to eat your cake and have it too, and it go up, and you make money. You're still going to lose what you would have, what you're paid for the contract. So there's a few exceptions, like if you are trying to do non-directional, and you're just trying to collect theta premium, and you're trying to hedge out your directional exposure to the market. I've never been a hedger either myself, and I don't really understand. I mean, if you're trying to go long a bunch of stocks and then hedge your directional exposure to the market and hopefully that the stocks that you pick outperform the market, and you hedge that way to reduce volatility, there's a few reasons to do hedging, but for the most part, if you're going to buy something and then buy a put, I feel like you're just wasting time, in my opinion.
Yeah. Yeah, I don't disagree. And it's definitely different, levels of hedging and less sophisticated strategies. Even say I talk about Visa a lot. To me, Visa, MasterCard, they have a duopoly. So I'm not going to be putting all my money into just one of them. I'm going to split, so whatever money I be putting into, say Visa, I'm going to split between Visa and MasterCard. I look at that as one company. But if something goes wrong with one, at least I'm not completely, shit out of luck.
And that's more diversification, really, than.
True. Yeah, and diversification is a way to hedge, in a way. But, you're right.
That's a cool way to think about it, though. It's like I just own MasterCard and Visa. I just own both. And because I like to play fantasy M&A where you merge two companies, but that's essentially what you're saying right now. You're just like, nah, I'm just gonna buy both. And when it's a duopoly, it makes a little more sense because sometimes in sports gambling, it's not like I'm gonna buy Penn or DraftKings because it's like you've got FanDuel, you've got all the other incumbent players. But when you're talking about the duopolies, that's a fun way to think about it.
Yeah. And like another industry, I'm bullish on is semiconductors, microchips. It just, we're going to, just the trends. I'm a big trend investor. Like the trends are all pointing in that direction. Everything we use uses that. It's not going anywhere. But there's so many companies from, Intel to NVIDIA to, AMD and this. And I honestly, I don't know how to truly analyze them. Like, yeah, I could look at their financials, but there's more to it, and there's more, things going on that I just admittedly don't know. So I'm not going to go and try to pick like a few of them. I just go with my favorite ETF. It's called SOX, SOXX, and that's one of my largest holdings right now because I'm so bullish on the industry, but I don't know which companies are going to go. But I think it's going to outperform, it's going to outperform the NASDAQ 100. It's going to easily outperform S&P 500. And at least you're a little bit diversified there.
One of my most ignorant takes is that semiconductors are going to go away.
Oh.
Just because it's too obvious. It makes way too much sense when you look at it and you look at the trends of everything, that the chips and everything, it's just going to become, our world's going to become more and more digitized. You can see it happening every day. That's too obvious. So then I'm just like, I see the bull case too much. So I'm like, everyone's got to be missing something. And there's going to be like a new form of semiconductors that's going to make it way, way, way more efficient. But it's complete ignorant take because I have no idea what a semiconductor even does. But it's just too obvious. It makes too much sense.
No, I got you there, and I'm definitely, a little more contrarian. So I appreciate that. To me, a big risk is some of these companies like Apple, or I forgot, like might try to start creating them in-house. So if these big companies, I always get scared when these big players try to, create anything in-house. Amazon enters any industry, say Peloton, for instance. I believe they teamed up with NordicTrack or something, but either way, they enter any industry. If you're in the stock that they enter, you're fucked.
Yeah, and I thought it's been a while. I thought Apple said they were trying to do something like that already. But,
yeah, exactly. So to me, that's the biggest threat or biggest risk. But some of these things, like people want to do, but it's a lot harder. Everybody always says, "Oh, search." Anybody could do what Google does, but things are a lot harder than people realize. A lot of companies try to do search; it's just not as good. There's a lot more involved. I mean, Google does a lot more than just search, and
And then look at just like, because I've tried to understand semiconductors, like just watch like a how it's made video on semiconductors, and you're like, no one's just gonna just like take that in house for fun. The only reason Apple's doing it is because they sell 10 billion phones and everything. Like I don't think there's another company other than Apple that when you watch it and you see how like crazy these industries are, it's not like the kind of thing where you're like, well, we'll just build our own.
Yeah.
Only Apple could do that because of their scale. Maybe Google, but not even Google.
Is there any worry about, say, like NVIDIA? Isn't NVIDIA already like a top 10 biggest company by market cap currently? I mean,
yeah. I mean,
do we think it's a little, is it too far ahead of itself a little bit? Is some of this maybe the future profit or whatever priced in already?
Yeah, I mean, that's a good question. They had a monster year. I own a couple, like I have an M1 finance account that I put like a little money in each month, and I have a couple shares of NVIDIA, but mostly I just stick with their like 9 or 10% in that SOX ETF I was talking about. Honestly, it's hard to say, and that's why I just stay away from picking the individual players. But like, yeah, as Fat Baby was saying, this shit's complicated. it could make sense for like Apple to bring it in-house because of their sheer scale, but are they going to be able to create it as good as these other companies? And I don't have the answers. I don't really know, but I'm kind of betting that these companies know what they're doing. Sure, Apple could go and buy maybe a smaller one and try to make it better, but I'm kind of banking on these companies that have been doing it for years. They know what they're doing. They create these things so small, and it's just truly incredible. As Fat Baby was saying, if you watch them make it, like not anybody could do that.
Yeah, speaking of Apple, it's kind of had a little bit of a glow up recently after it sold itself to China. But what's your thoughts on Apple? I think once it gets to once it gets to that 3 trillion market cap, it might have a little cool off.
Yeah, that's a good number. I can never say anything bad on Apple. It's a great company. I've actually never been a true Apple. Like I never bought shares. Obviously, a lot of these ETFs like QQQ and they're like 10% Apple. So between my all my ETF exposure, I still hold a decent amount of Apple.
Yeah.
That's one of those ones that I was a little bit of not a bear, but I didn't see the growth that other people saw, but ultimately I was wrong. Same as Shopify. I just didn't really maybe truly understand their business, and especially like the Apple what's it called, the App Store, and really how they make money. It's not just selling appliances, selling phones. So I was I'll admit that I didn't believe in the bull case, but they are a dominant company.
Yeah, I owned quite a bit of Apple. Actually, I sold some of it last week. I guess I should have held it another week because it was kept going up. But I sold it not because my position on Apple changed, but it was getting to where it was too large of my portfolio. So I scaled down so I could diversify a little bit out, because it's been on such a run. At some point, it does have to cool off. But you said something there that I think is is a good question. You're talking about how you were wrong maybe on Apple and wrong on Shopify. I think that's one of the things in investing or really everything in life is you have to know when you may be right and to stay in there, and you also have to know when I was completely wrong. I got to cut my losses. How do you go about doing that? I see a lot of FinTwits. You got some crazy people in there. You see a lot of people on there who is I'm a long-term investor. I bought this. I'm never going to sell this ever. And that's not all. A lot of stuff changes over time. How do you basically decide when basically you were wrong and it's time to shift gears?
Yeah, so that's a great question. So as far as like Shopify, some of them I'm just avoiding. So I'd rather be wrong and avoiding something than wrong and investing in it, because yeah, I was wrong about Shopify. I missed out on a lot of gains, but I didn't lose any money. Even C Limited, I believe Fat Baby, that's a stock he likes. And, I looked at it briefly. I liked a few things about it. I bought it. Then for some reason, I thought it was a China company. So I had some misinformation. And there's a couple of things I really didn't understand like a lot about it. So I got out within a couple months. I made a little bit of money. It kept going up after that. Now, I mean, I look good because it's it's been tanking. But another stock, say Fastly, is one that I actually did invest in, and I did good with some couple swing trades there. Honestly, it was all luck. I'm not gonna sugarcoat that. And at one point, sort of dropping, and like you said, I'm like, I'm gonna keep buying more. It's at a good price, but at a certain point, I kept reading about it, and it just I didn't think, I wasn't as confident, and I just had to kind of cut my losses on that and just kind of move my money somewhere else and just stop thinking about it. There comes a point where your conviction, you have to just reevaluate your conviction. Obviously, Fastly, I didn't have a huge conviction in, but as things are going, and a lot of things like Peloton, people see that the price was so high at a certain point that it's going to reach those all-time highs again. But what a lot of people don't realize is it got to those highs because the CFO and the CEO, like, they're so optimistic and they think the certain growth is going to, be sustainable when it's not. So it's still a good company, but is it going to ever hit those all-time highs again? Honestly, I don't think anytime, I don't think so at all, but I'm sure it'll grow from here. I do like the business model with Peloton, but whenever it does go down, I try to understand why is it going down, because if it's something that I don't agree with, especially when, like, say Peloton, for instance, when it had that treadmill recall, I'm like, oh, it's a short-term problem. So I never once put any money in Peloton, just as a disclaimer. I'm just, for some reason, that stock popped into my head. But either way, so if it's a short-term problem like that treadmill recall, I'm like, oh, that could have been a good time to buy. But kind of seeing what's going on now, I just think it's going to be a sideways, trade sideways for a while, and not much movement, not much upside there, in my opinion. So I think, like you said, a big thing is just reevaluating and understanding the bear case, and just sometimes they make sense.
Yeah, and I've never been Peloton. Don't have any I don't have any reason to get into. I know Fat Baby he's big into Peloton, but like you were talking about the treadmill thing. If I was going to invest in Peloton, it would have nothing to do with the treadmills. I think the subscription service is kind of where the money's at. They can sell the $2,000 bikes or whatever, but I think they're, if they expand, getting people to sign up is where the money can be made. But going on from that, I guess you're looking to get into real estate. As you seem to be on the fence about it a lot of times. The market's kind of high now, or are you looking to get in now? Are you trying to wait, sit back and wait for it to cool off a little bit, or I see you talking about it a lot. I know that's something you're interested in.
Yeah. So, obviously I own my own house. I probably made 200 grand in my house over the past few years. So you see that it's definitely encouraging, but I've always had an interest in real estate. But then, you think how easy it is just to buy index funds. So is it worth going through all the hassle of buying, rentals? And when you do own a house, my house was built in like the 60s. So, things go wrong. Pipe breaks, $2,500 out of my pocket. And just a lot of shit does go wrong. And, you could be doing all this work and barely, breaking even, dealing with people, they don't pay rent, or, evictions. There's just a lot of potential, things that could go wrong with real estate, especially when you just think how easy it is to invest just from the comfort of your own home. But I do like to diversify. I have been leaning more towards the vacation rentals because, we talked earlier about how I, did it with my own house, and that's where there's a lot of margin. So, I rented out my house, I made like $3,500 over my mortgage. So when you see those type of numbers, it's like, oh shit, short-term rentals, that's where you could really, make it worth your time. And with just one property, you could, do pretty good. You probably could, with two properties, you might even be able to, replace your income, maybe 2 or 3. It is a lot more work, and you do need to, have a good cleaning staff on hand, and you need to have the right properties ultimately. So it's hard to find those properties. And when I'm looking, for me to take that chance and to make that plunge into buying that property, it needs to be something, very unique, whether it has the good views. Recently I was trying to get this one that was on like a river. It was a tiny cabin, but the fact that it was on this river near Rocky Mountain National Park, that's going to rent out, pretty fast. So I always look for that, but those are hard to come by. Colorado, the market is just, it is hot. Everything's expensive, and those type of places, they go, within the same day. So it just, you have to, get on top of it. But it's definitely just always on my mind. I think my goal this year is to either buy a property or stop talking about it. So over the next 6 months, I'm going to just keep looking, and then I'm going to decide if it's for me, or if I need to focus my energy, somewhere else.
So if you would do it, would you do Airbnb, or would you rent like to someone that would be living there as a residence. The way you're talking, it seems more shorter term.
Yep. So definitely, the Airbnb or VRBO type of deal. You have more control over the house that way. You don't have to worry about like tenants not paying you rent because they're paying you up front. They're only there at a short time. If it's a nice vacation rental that like I could also drive to and use, on the occasion, that's another plus.
And then you can make more that way, right? Because the short term you can get a way higher rate per month versus if you rent it, right? I mean,
Yeah, no, absolutely. That's where the numbers really go. In Colorado, if you buy a house and you try to rent it out, like sometimes the numbers don't really make sense. They won't really cash flow too much. But you turn something into a vacation rental, you're, probably tripling the revenue. Yeah, there's a little more cost. Utility bills are gonna probably go higher. You have to pay for like the cleaning, but you have people that will rent it for a week. Honestly, the best way to do it is monthly rentals. There's somebody Contrarian Saver, I think is his handle on Twitter. He owns a few and he does like monthly rentals. The monthly, you're not dealing with so much cleaning, so much coordinating. They're there for a month, but they're still paying that premium to be there for that month. So the numbers make a lot of sense, and it's less work than having to deal with the weekend. The weekend people. The weekend people are also a little more rowdy.
right?
Yeah, and
What's the type of clientele that you would be renting to? I mean, I know it'd be kind of hard if you're going through one of these sites, but what would be like the typical person that would take a month rental?
So my house, for instance, these guys they just sold their house. They're in the middle of buying another house, but it wasn't ready for a month. So they needed a place. They also had a little dog, so they wanted a nice place with a yard. So there was a month in between, so that it made sense for them. You do have people that are coming to there's a high population growth out here, so people are always moving here. They need a place to stay for a month or two while they look for a house. So that's a pretty huge market. And with the whole remote working nowadays, especially in some of the vacation rentals, people want to live in a cool place. So if I get a nice place in like the mountains, let me go live here for a month or two and just kind of do the Colorado thing and then go somewhere else. So you have a lot of people like that. And ultimately, you don't think, but like there's so many people out there just trying to, do something. So like I live in the suburbs. When I was doing the weekend rentals, like a few years ago, people, some of my friends out here that I worked with that, lived here, like, oh, who's going to want to buy, rent your house for the weekend? You live in like the suburb, but I did it. And like every weekend I wanted to rent it out. Like I always had people, whether they're coming from some place just to come here and smoke weed, or they're coming for business conferences. They're coming for, anything. There's just always people like trying to do something. At least, Colorado does have a high, tourist industry, but there's just so many people in this world, in this country, that there's just always somebody out there, trying to do something that,
You might not even think of.
Yeah, I mean, like speaking of renting in the suburbs, John got married back in May in Savannah, Georgia, and that's what you did, right? I mean, it was a house in the suburbs. We didn't stay in downtown Savannah because it made it more fun that way. We didn't want to be dead in the city where all this has happened. We had a yard and was able to, go outside, sit by a fire, that sort of thing. But yeah, being out in Colorado, I could definitely see the benefit over a vacation rental versus, trying to buy a house and, rent to a family or whatever, because the prices are so high. I would say that probably can swap if you're in, a different location. If you were trying to do that, you would probably not want to invest in Colorado because you'd have to make so much money back before you're even, making anything. Have you ever thought about, corporate rental or corporate real estate? My father's really big into like corporate real estate. Basically, he owns like some laundromats, some gambling places, some storage facilities, that sort of thing.
That right. So like your dad owns the retail space of a laundromat and he rents it out to somebody that does the business.
No, he owns the laundromat.
He actually operates the laundromat.
Yeah.
Rent out machines or anything like that? Or
No, I mean he owns
he
the
just
machine.
owns it. Okay.
I mean, it's a lot. Yeah, I mean, he sends he sends my sister to get all the quarters and stuff and check the soap. But yeah, I mean, apparently there's a lot of money in laundromat. When he said that, I was like, what a laundromat, like quarters. But what was funny is just this weekend we hosted my wife's at her work. They take turns hosting like parties. So like it was our turn for the Christmas party, and one of the husbands of somebody she works with is in the real estate, and I was talking about something about some sort of business, whether that's a good value, and he was like, yeah, he's like, another thing that you're not going to believe is great value is laundromats, and that's without me ever mentioning it. So I was like, shit, he might be onto something, but.
Yeah, and I think that's a good idea. And things like a laundromat, it could be relatively passive, especially if you can, hire someone to manage it and is still,
I mean, even for yourself, I mean, you're basically I think he goes like once a week and just pulls the change out of the machine, basically.
Yeah, it's not bad. I've definitely thought about it. I search on like loopnet.com or something like that, and different like businesses for sale, and I frequently look for, something maybe to inspire me or something where, that makes sense. I haven't, obviously pulled the trigger on any of them. I wouldn't rule it out.
So I think from what he's talking about, I think storage units do really good because kind of the same thing you were saying, like people come to an area, Colorado has such a growth. You're moving to Colorado, but you don't have a place right away every time. So, I mean, you got to have, places to store your stuff. And then you were talking about the vacation rentals. Another, clientele, I guess I could see is, students, a lot of students who's, in school, they want to do internships or whatever during like summer break or winter break, where it's like 2 or 3 months at a time. So a lot of students are, even when I was in school, people I went to class with, they do these internships, places that they would just like to visit or whatever. So, they're going and looking for, the pay by the month because they're only going to be there 3 months. So they can't sign a lease or anything like that. So, yeah. Especially out in Colorado, I think there's a lot. Real estate's big where I'm at, which is crazy. So I live in like Blacksburg, Virginia, which is just like a little small town where Virginia Tech's at.
Okay.
And real estate, I would say, is crazy. Like you said, so the first day my house went on the market, we made an offer. So that's how it was kind of like here. And since the real estate's boomed up, we've made probably like 60 grand on our house, and they don't even know that's based on like the images and that sort of stuff. That was what we bought. They don't know that we've redid the entire floor. They don't know that we fenced in the entire yard and all this other stuff. So, I mean, that's just solely based on the market coming up. So yeah, real estate's super hot. I don't want to keep you too long, so I'm gonna give Fat Baby his chance to talk about Bitcoin since we don't allow him to very often.
Oh, that's good. I like this show.
So I'll sit back and, y'all can talk about whatever you would like. I know it's super down right now.
I'm just super down, man. That's not super down, man.
It's down. Like it's down 20. It's down 20 grand in 2 weeks, right?
Man, it's up. It's up 60 grand in 10 years. Whatever.
Yeah, so that's a good point. It kind of goes back to something we did talk about earlier. Is like, sometimes things can be a good investment later. Like I can like a company, but it's not a good investment at this price.
Yeah, and that's one thing about Bitcoin is I actually don't the volatility and whatever's going on now. Yeah, I'm going to talk shit, but
you do it because
I do recognize the long term gains, and I mean this year alone it's up like a few 100% probably. So yeah, I'm not I invest in stocks. I that happens all the time. It doesn't make it for that particular reason, it doesn't make it a bad investment.
Yeah, and I think your shit talking is amplified because people come, the crypto people are so you can get under their skin really easy, so they come after you, and then you just you like amping them up the same as you do with the index fund and the dividend people because I mean, if they listen to the show, you talked about investing in index funds on the show, but you do get into it with them on Twitter.
Exactly. And that's, I get certain people, especially on Twitter, they piss you off. Like a lot of the index fund guys, they sit in their high horses. They think you could only do that, but you're discounting all these other strategies, and they pull these statistics, and they don't really apply to me or to other people. And you're taking, 20 shit strategies and you're comparing them to index funds. But what about the few good strategies, that are beating it? And then the dividend. Yeah. Obviously, I'm just having fun, shit talking, Bitcoin. I just hate how everybody just thinks it's a guarantee. And, the way people just talk about it nowadays, that like it's safe and it's there's no way it's gonna be obsolete. Like it's there, and it's just this perfect investment. It's gonna replace money, or everybody has a different interpretation of what Bitcoin is, and why they like it. I think it's a huge catch-22. I do think I'm definitely no expert in Bitcoin, but I'll go off the on the record to say, like, I do think it is a bubble. But I recognize, like, it is cool, and the fact that it kind of stores value and this and that. But like in 10 years, I do not think it's going to be around anymore.
So I'll lay out the real quick bull case for Bitcoin, and if people will get angry at this, Bitcoin bulls will get angry at this, but let's just say Bitcoin's here to replace gold, because Bitcoin can do a better job than gold at what it does. Because the main thing that gold has that Bitcoin doesn't is gold has some functional use behind it, beyond a monetary value, in that it's used in like computers, it's used for jewelry, all that kind of stuff. But when you look at the actual value of what that is versus everything else, the intrinsic value argument sort of out the window for me when you look at Bitcoin versus gold. And then when you look at gold has a 20x higher market cap than where Bitcoin is right now. So if we're saying long term Bitcoin can be a store of value, the currency of the internet, and then you keep looking at it and you say the internet's only going to keep getting bigger and bigger. We've already got this comp, which is 20x from here, and that's not necessarily its ceiling. And then you've got the whole tailwinds behind it. Then you start to layer in Venezuela now accepts it as legal tender. Things like that are pretty crazy developments for something that was invented 10 years ago.
You mean El Salvador?
Yeah.
Yeah. So, I mean, for one, I feel like I do mute all the Bitcoin related words, but occasionally they pop up. And I do know you said it's you use the word commodification of trust.
Mm-hmm.
I do think that's the best thing I've heard to describe it, because first of all, it's not, is it money? Is it currency? It's not a currency. It's a commodity, and for one, I'm not in the business of buying commodities. I don't understand them. I'm not going to be buying corn or gold. These are just things that are not my realm of understanding. And like people like Charlie Munger, I remember you tweeted like, what mental note is Charlie Munger missing with Bitcoin? And I think people like myself or Charlie Munger, we're fundamentally value investors. We like to understand the value in something before we're kind of, willing to put our money into it. Whereas with Bitcoin, the underlying value isn't there. It ultimately is like you're hoping other people, the technology works, as you said, to, replace gold, but you're kind of banking on everybody believing the same thing. In 10 years, are people still going to believe that? Who knows?
Yeah, and I guess that's where, to me, that's where it's an asymmetric gain of trust for Bitcoin over time, is that it used to be what people used to buy drugs on Silk Road. Now it's become something more. And I don't see how that trend reverses, because there's no one in charge of Bitcoin. It is literally an internet protocol that runs on its own. There's very little change to Bitcoin that's happening. It's internet code that's pre-written. So that's where, to me, it's it was trust commodified, and now I can see the path. It's a lot easier for me to see how Bitcoin gains trust as people continue to accept it, and harder as it loses trust, because there's not anyone in charge of it to print way too much, to do all these dumb things. It's decentralized community that essentially runs it. You do have people who treat it like a religion, but to me that's not going to hurt it too bad. Just because those are just the people you troll with a little bit when you tease them.
Yeah, those are my favorite. So I will say and a big reason, so I did that whole Bitcoin short a few weeks ago or a month ago, however long that was. A big thing that I was afraid is, the ecosystem's growing and more people are adopting it, that anything could happen, especially in the short term. But the more the ecosystem builds and the more these companies are, enabling it, it definitely improves the bull case for it. I will not deny that. But people get excited about anything, and shit could turn fast, quick and fast, and you could lose everything with it. And earlier I said something about it being like a catch-22. I do think if it got too big, or I hate when people talk about helping the unbanked. This one of the Bitcoin trolls always, what about the unbanked? But first of all, the unbanked in all these other countries, they don't have any money. That's not gonna, and then he calls me privileged, but these people don't have any money. So if you're gonna help all the unbanked people combined, you're not gonna. That's not moving the needle, of Bitcoin. It could help some of them, but also a lot of those guys also don't even have internet. So the idea that's going to help the unbanked, I think, is not a great argument. There are a couple countries, like I think maybe the Philippines or something, that maybe it could work, but ultimately I feel like PayPal and these different things have the technology to send the money instantly, at least within the United States. Yeah, international, there's a lot of other concerns, and it has to go through OFAC or different security measures to prevent money laundering. So it slows down the process, but a lot of those measures are in place for good reason. When you see countries like Iran, able to get around sanctions because of Bitcoin, it makes me uncomfortable that like America is not going to allow that. Eventually they're going to, at a certain point, they're going to do whatever they can in their power to stop that. And that might just be somehow, banning Bitcoin. Oh, how are they going to ban Bitcoin? I don't know. I don't know enough about the technology to say, but they could definitely prevent it from, the conversion of Bitcoin. So then it has to stay in the ecosystem. And sure, a lot of the Bitcoin people will say, oh, that's a good thing, because then, it doesn't need to leave the ecosystem. It's just the money. But, I don't think, I don't agree with that. But
so one of the poor things I, see on Bitcoin is a lot of the people who are, pro Bitcoin are, let's say very intelligent, or, at least keep up with some, the market or this, that, and the other. What about all the like lower class people, which are way more than, upper middle class, or currently the pros of Bitcoin? How are you going to be able to convince, some single mother of four to, use Bitcoin?
Well, the long-term just case is Bitcoin does stabilize in value, because right now, if anyone tells you Bitcoin is stable right now, they're lying to you. You can look at their chart and just see it go up 6% a day, down 6% a day. It moves like crazy. But long-term, the bull case would be it becomes a stable source of value as all the leverage behind it, all of that starts to go out as it moves more and more towards a commodity and less away from a speculative investment. And so when that happens and it sort of goes towards the gold end, you sort of have the option to say, I'm a single mother and I'm going to keep $500 in my bank account. But that $500 is losing 10% every year because of inflation. Or you could have Bitcoin, which exactly how many are going to be minted. And if it's a store of value, that's how it will help
But I see.
on those ends.
I think your answer right there is exactly what I was saying. That the people I'm referring to, they're not thinking that the money in the bank is losing X amount due to inflation or this and the other. I think that's going to be a big hurdle is to get people who don't understand what Bitcoin is to buy into the Bitcoin.
But that's why you got companies like what Cash App is doing is a big deal.
You got to be financial literate.
Yeah, Cash App allowing you just to buy Bitcoin easily right now. Eventually, it's going to be hold Bitcoin easily, then transact your Bitcoin for anything easily. And then all of a sudden, once you do that, then people are just going to look at it. And if Bitcoin has the name value to it, you'll have the option when you're setting up your wallet with Cash App. Do I want to keep my money in dollar bills or do I want to keep it in Bitcoins? Oh, Bitcoin seems cooler than dollar bills. I'm going to keep it in Bitcoins. And then it just goes from there. So it doesn't have to be a financial literacy decision necessarily as much as it is. If you have the technology built around it and you make it super easy for people to do, they're probably going to do it.
So I don't know. I think that's where I feel different. I think it's going to come down a lot to people knowing about it. There's no chance that you're going to catch,
That's also that's like the crazy bull case is what you're saying. Because the single mom doesn't carry any gold with her, yet the market cap of gold is 20x of Bitcoin.
But we've had money for, years. You know what I'm saying? We've had the US dollar for years and years and years. Like, I don't think most people are walking around like my money is backed by gold. But I don't think people think about that.
Gold. So why?
But what I'm saying is I don't think people would ever, I don't think that even comes into mind. They just know this piece of paper is worth what this. Yeah, this is what they say.
And I also think about so this is what I understand, like all the different sides. And when I come to it, I just think I don't know because my parents are business owners and they've done very well in their life. And I would say that they are financial, they understand finances, but there's also this disconnect with inflation. Because when I talk to my dad about inflation, he understands the concept, but at the same time, if he buys something for $5 and he sells it for 10, in his mind, he just made $5, no matter the timeline. But at the same time, when you think over years of depreciation of the dollar versus assets and how things have went up over time, and not every bull market is caused by inflation, but as things rise together, that's usually what you define inflation by, is a basket of things that all go up in value. I still see a disconnect in people even that are successful business owners that don't fully understand, if they, just for simplicity, say they bought a piece of property for $100,000 and then 20 years later they sell it for $150,000, they think they made $50,000 even though that's the nominal price and not what the inflation price is.
So what you guys are all saying is Bitcoin as a currency versus Bitcoin as a commodity, like I'm saying. So when you just look at Bitcoin as gold, currency is a way bigger deal. And I agree with you guys. You got to jump through a lot of mental hoops to get there. But a commodity, if gold as a commodity is its ceiling, which doesn't even make sense, that's its ceiling. To me, that's just the only reference point we have. That's 20x. And there's a lot of potential beyond there. So that's where, to me, I see the bull case for the future. I see asymmetric trust, but I definitely get what you guys are saying because, as a currency, it's not there. It probably will never be.
I can see it more, like you're saying, is on the commodity side.
I agree with you. Yeah, I get what you're saying as well. Yeah, I was definitely talking for
currency. The currency thing doesn't make sense to me for the reasons we've already stated. But I do think can institutional clients like pension funds and things like that, can they invest in Bitcoin now, or what is that?
I think so. It probably depends.
It's complicated right now, but
so
right
as soon
now,
as they can come online and start buying, and like you said, the available money that's out there that's restricted to buying it, like you were saying, as soon as it becomes easier and less restricted for some of the bigger institutions and for just the common person to be involved or easily have it, like I think PayPal was trying to have it to where you can easily transact in Bitcoin, where you can put your money in Bitcoin instead, or like you're saying, Cash App. So as those two things come into play, it's only going to make more money available to enter the space, and that has to be a bull case. So I do agree on that on that fact, and I think that there at this point in time, I would think that there's more upside than down in it. I've traded around it a little bit, but it is definitely one of the things to Finance Hippie's perspective is I do think a lot of people see it as a for sure thing, and I don't think that anything is a for sure thing. I think there's maybe asymmetric. There's more room to the upside than downside, and it could be a really good trade, but for how long and at what price, I guess, is the question for me.
Yeah, and that's the same with me. I own the smallest amount of Bitcoin ever. I put a few bucks each week or whatever in it because of what John said. I don't understand it at all. I don't really even have an opinion on it. But if the bulls are right on Bitcoin, it's going to grow not to like 60,000, not to 70,000. It's going to be humongous. Whereas if the bears are right and it goes away, okay, I lost a couple $100 basically.
Yeah, so
it's more of a lottery ticket.
I mean, I do agree with Fat Baby where he's comparing it to gold versus, you don't need that everyday person isn't worried about inflation, but they're not the market to buy Bitcoin as an inflation hedge. The people that are buying gold, those are the people that are in the market to buy Bitcoin because they are worried about inflation and they want to protect their money.
And I would say that's the financial institutions that are trying to seek yield. I would say once they come online, that would be a big case for it.
Yeah, and that's actually what like Kathy Wood says. Like, once inflation institution investors start, allocating 5% to it, it's going to blow up. And yeah, she's right, but how do you know that's going to actually happen?
You're basically just saying,
and
Finance Hippie, you're basically just saying, everyone is saying when, and you're saying if.
Right.
Yeah, exactly. For one, I get Bitcoin as the biggest, but you could create all these other coins. So, there's always that risk too. But I also believe once it kind of stabilizes, a lot of people will get bored. And it's like, all right, if this is not growing, 300% in a year or whatnot, you're going to lose a lot of people to Bitcoin.
Yeah,
so
and
really
I think that it's good. I do think that it's good that you are voicing the opinion of, nothing is a sure thing, and I think that's something that everyone needs to take away when talking about any certain opportunity or investment is nothing's guaranteed, and that's definitely a conversation to have around any type of investment.
Yeah, and kind of, like you said, there's a lot of people here recently got into it because it blew up, and some of those people probably will, they don't have any conviction, they may pull out. So there could be some, it's going to be turbulent for a while. So kind of like that short trade you made at the price it was at, there's a decent chance it wasn't going to all of a sudden blow up another, 50% from there. You were probably making some money on it either way, whether it was now or a month from now. Like, it's been so volatile, at some point you were probably at least breaking even on that trade.
Yeah. And that's why, like, the only thing that would, scare me is institutions. If they start, if like what Kathy Wood says, if institutions do that, then yeah, Bitcoin is probably going to be, a solid bet. But if that doesn't happen, I think there's no chance that it survives over the long term. Ultimately, people talk about inflation hedge, but if you're trying to save your money from inflation and then, the asset drops 10% or 20% due to speculation, is that really, hedging you against inflation? So we'll see in time, but yeah, as we said, it's mostly the people that just think it's a sure thing. It's, I think there's less than 50% chance that, it makes it, over the next decade. I do think, like I said, though, if the institutions go, yeah, it could really blow up and be pretty big. But I also those concerns about people, countries evading sanctions. Those are very legitimate concerns. I mean, yeah, you could look at it, but these are sophisticated countries that, they could work it. I don't know. I'm not a, expert in technology, but they could do, it's easier to money launder, and especially with like NFTs and stuff nowadays, it's easy to money launder and to get your money into the system and do all sorts of sketchy things. Yeah, I get that they have the ledger and there's some what's it called, book of ledger and all that, but these people could still get around that. It makes it a lot easier for the criminal activity. I do think if it gets too big, it will fail. I like Ray Dalalio's take on it. I think he said some similar stuff as what I'm saying. It's its own worst enemy. If it gets too big, it's not gonna work out.
That's where it gets like, I just like, if I'm a criminal, I'm not using Bitcoin because literally every transaction I make is recorded. So that's where, like, if you're a criminal and you're using Bitcoin, you're a dummy.
So,
like, you're literally
recorded,
just like automatically posting all of your transactions and your whole history to the internet. It's like live streaming your financial crime.
But nobody's going to be looking. Nobody's going to be. It's hard to trace it back.
Yeah, but if they ever find your wallet, then they can find where all your money went. So it's one of those things where it's like, it'd be like a drug dealer doing all of his deals over email. Because if you ever are caught, they're going to be able to link you to everyone. So that's where, like, it's just not the market for it. I get where until they find your wallet and they know you're doing something bad, it's not clear. But once they find you, you're going to fall like a house of cards.
Yeah, it's like if you get caught doing something, but you still get a trial, but they're going to investigate now that they think you've done something, and then you're in trouble at that point. I guess one more question I have before we let you go, Finance Hippy. When are we getting this boxing match between you and this Brennan guy? I know a site. I think Barstool would put you up for it.
Any day. He might be a little bigger than I am. I'm not sure. But honestly, with that kid, he's always like, oh, I just signed this big deal. It's like, you're full of shit. People are always lying about their sales. Like, they're making these sales. Like, oh, they're very vague about it.
Well, the reason I bring it up is because we do a lot of Gumroad bashing going here too. I feel like there's a big disconnect on Twitter. Personally, of people, they're looking at, these people are posting all these gains and this, that, and the other, and they're realizing that, and they don't realize the fact that they're really not that good of an investor. They just have a big following now, and everyone's buying their Gumroad courses or whatever, and they're making a bunch of money on that. And they could be a shitty investor. Like, they could make zero money on investing because they're making so much money from you buying their stuff. And the reason I even bring him up is because I just saw a tweet as we were talking about Bitcoin. He literally posted today saying he hit $50,000 in Gumroad sales this year. That seems outrageous. And if he did make it, good for him. He's a hustler.
I mean, so like, and exactly. So if that's a legitimate thing and he really did that, I would take back every mean thing or everything I ever said about the kid. That I would have the utmost respect. For me, as a kid selling budgeting, I don't see the market. What person is going to pay you to help them like budget? I just don't think that's a big enough market. The people that need help budgeting don't have the money to spend. And that was one thing with Finance Hippy. I used to have a big following on Facebook, over 20,000 followers, and it was good. But every time I tried to sell something, my audience was people like frugal people and people that didn't want to spend money. So it was always hard to make a sale. So like the audience is just not, it's not a lucrative audience. Budgeting, teaching people how to budget. Yeah. I just don't see those numbers. Like, tell me you made $50,000 teaching people how to budget. That's bullshit.
And I don't know whether his numbers are right. I don't really talk to him. To be honest, we could be blocked. I don't even know. But my thing is, you can find all that information online for free. Why do I need to pay this dude $50 to watch a PowerPoint presentation? You get what I'm saying? Like, and that's with everything. There's almost everything you can find for free. And if it's not for free, there's someone better than this guy trying to tell you how to do it. Like,
absolutely. Like what you just said, you nailed it, and they put the nail in the coffin there. Because if I want to learn about index funds, or I want to learn about this, I'm going to trust. First of all, I'm going to trust those resources online. I'm going to trust whether it's Investopedia or some more. There's more trustworthy people out there giving this information. Why am I going to do some anonymous or some random, tool and
random account online?
Well, people who are say for example, if they're making this huge amount of money, investing in index funds or whatever, why do they need the sell stuff to you? They're making so much money doing this. I don't know. There's a lot of dumb.
To that point.
Well, I get what you're saying. You get more money, and then you can make even more money. But there's a lot of dumb people right now.
Well, it also depends. Like if you're investing in your retirement account and you don't really have that money on hand. I mean, yeah, you might be doing well, but it's not liquid. Maybe you want some liquid income. And
so, how about this point? What about if some of these traders who are saying they got an 85% win rate and got this sort of return? Again, if you were that good at it, all your effort would be into that because you would make more money.
Yeah. I mean, I agree with that one. If you have a strategy that works, the last thing you want to do is give it to everyone because then it'll stop working.
Yeah. Especially when it comes to like trading, it's more true. If you have a strategy like that, yeah, you're just going to go for it. I get like the budgeting thing, that's a business. He's trying to create a brand for himself. He's trying to create a business. So like, I get why he's trying to make money.
That's fine. I'm not.
I'm
not dissing him on that. I mean, it's more there's too much, right now encouraging people. It's just you got these course creators working together to basically feed the lambs to the wolves, plugging each other, plugging this and that, and then they're all benefiting when in reality the material you're getting is no better than what you could get for free.
Yeah.
And then they're getting rich or whatever, or like you said, could be just lying about the numbers, but either that they're getting rich while you basically gain, I don't want to say nothing because, it's probably better than nothing, but you could have got the same stuff for free.
No, exactly. And that's really, the conclusion I always came is like, you could literally find all these resources, online. I mean, this one kid, Dividend Hero, he recently blocked me. Yeah, he's a nice kid, whatever. He does some fun things, but he doesn't know anything about stocks. He's always like, oh, T under 30. It's like, all right, dude, no, it's not good under 30, now it's $22. But he doesn't even understand how stocks work. He was talking about, I remember, Chipotle, and Chipotle is one of those stocks where like the share price is so high, but that doesn't mean that the company's market cap is is so big. And he's like comparing that to something else, like, oh, I can't believe how big Chipotle is. It's like, dude, the share price doesn't mean anything. Like, look at the market cap. It's not, it makes sense. It's not, you're looking at the wrong
because how many shares is obviously an input to also what the market cap is, just not the price of the share.
Exactly. So if but if you don't understand how stocks work, like, you shouldn't be giving stock advice. And a lot of that kid, a lot of this, what he does, like, 30 stocks under 30, and he sells a book for $7. It's like, all right, I could literally just take a stock screener, download a stock screener and get the same information, like literally under $30. That doesn't mean shit to me. Like, I don't care what the share price is. They do a split, or this or that.
Exactly.
Affects the share price.
And John, we had an episode, I think, explaining, market cap and some of that sort of stuff. But yeah, it's like you said, the dividend guys, anyone with the brain, I mean, it can make sense to them. If you buy a dividend stock and you take those dividends and you put them back in, you could have more money as long as the stock doesn't fail, like you said, with AT&T especially. But I don't know, some of the stuff is, pretty straightforward. We have a buddy who's kind of in the same boat. I don't know if he probably sells Gumroad courses now. He didn't the last time we talked to him, but I know how much he makes off YouTube, and he's been making that sort of stuff. But I'm not going to out him because he's always been nice to us, but there's too much out there. A lot of people's got to understand that the money they're making isn't doing, they're not it's not taking their own advice. It's selling their advice to you.
Yeah. I wouldn't be surprised if you're talking about the decade investor, but I do think that YouTube, having a YouTube business is completely different because you're making money off ads and you're doing, I think it's a legitimate, that's a legitimate business. You're not trying to really sell courses. You're going, I think YouTube is one of the best social media places to actually make money. Decade investor, I just, the only thing that bothers me is like he's always just like, oh, everybody makes fun of me to investing, or he's always just like hyping, making bullshit tweets. But
I mean, So I did tell him that recently. I told you got to stop with the cookie. Some of it's get too cookie cutter stuff. Like, you can't just post. We can't just post. I don't have a girlfriend this week because I'm trying to save money. Or come on.
No, exactly. I the only reason I knew that because honestly, this might have been a year. I don't know, a few months ago, and I think he posted a picture with you and him at a pizza place. So I knew that
in Kansas.
I knew you had some sort of friendship or something with him.
He was one of so the cool story.
Funny, it's funny how you just like
So I guess the story about him is he used to play football at Kansas. The very first time we had him on the show, same with a lot of these people, honestly. I think he had like 700-800 followers, and now he has like 30,000. So even
we've
Fat
had
Baby,
people on very early,
So
Chris has done to Chris's credit, he's got a lot of people. He's found people way before they blew up, and was like, "Hey, this is a good person to have on the show," And so, it's been good. But
so Fat Baby, I think Fat Baby had like 150, 200 followers the first time we talked to him. And then, of course, we, discussed with him, and now he's part of the show because I do believe he is knowledgeable and he adds something that we don't add to the show because he has a financial background.
Yeah.
And a different take.
So just last note on the decade investor. Like I said, I'm sure he's good. I actually like his name, you're investing for the decades and whatnot. Some of his tweets that bother me, like he always talks about having like 100 or 150 grand at, 23 or 22, however old he is. And then he says he contributes that to his investing skills, but he's also saying he invests like an old man. So if you're investing like an old man, that's kind of insinuating that you're only making, 10%, interest or or whatever. So it's really not about your investing skills if you're only 22 or 23.
Well,
it's about your income. So however you're able to either create income or you're living at home or whatnot, that's where you got that 100 or 150 grand at your age, not because you're investing like an old man. That's what bothers me when people try to, contribute the wrong thing to their success.
I know he does. He's pretty strict. He does invest kind of more just index funds, that sort of stuff. But I will say that's one of the things that we did not know the first time we talked to him. He is like, I don't know how old he is, like 23. He's younger, definitely younger than we are. He's like 22, 23, something like that. But I think the difference is his mom she is like, his family's really big into finances. I think he had an investing account when he was like 14, 15 years old. So he is 22, 23, but he's coming up probably on like 8-10 years. So he did take some time to learn what's going on, not just like, start after college or whatever. He has a little bit of more knowledge base.
Yeah, I would say the couple things. I mean, I think the main thing with growing wealth in general is just, living below your means, saving your money, don't take out a lot of debt or don't leverage yourself too much, save as much as you can and try to get some kind of return above inflation. And I think that's the main thing. But the thing that bothers me is I'm a dirty little trader out here, and people give me a hard time about trading and stuff. But like you said, I mean, there's more strategies that work than just buy and hold, and people, they're a little bit too much on the extremes. That's one thing I've liked about our conversation is it seems like you try to swing everything back to, in the middle. It's not you're extreme this way or extreme that way. There's two sides of every coin, and it gives good perspective on how you should look at everything, really. I mean, and with doing that, you still have to have enough. You have to swing one way, but it's good to take the perspective on both sides and not just completely block it out and my way's the only way and this is how you have to do it and everybody else is wrong, because there's, like they say, there's more ways to skin a cat than one.
Absolutely.
Yeah.
Well said.
Yeah, and I know we had you on here a while. It is what it is. To me, if a good conversation's going, if the conversation's not getting slow, I don't see any reason to quit early. I know, John gives us a hard time. Sometimes we have a little bit. Yeah. Some of the podcasts get a little too long, but
it's my fault for the most
especially when we have like a guest on. We want to talk about whatever topics you want to talk about and that sort of thing. So definitely thanks for coming on and talking to us for 2 hours or so.
Yeah, I just looked at the clock. I'm starving over here, but yeah, the conversation was flowing. So this is a good podcast. So good stuff, guys.
Yeah, we'll definitely have to do it again in the future. We got the stock parrot on next week. So
nice.
And he's been on before. So nice. But thanks for coming on.
Yeah,
and
thanks so much.
Before you leave, where can people find you on Twitter? Is that the only place you post stuff on Twitter?
Yeah, so I used to have my blog, but I actually got rid of it this past year. I honestly hate writing. It just wasn't, even though I started it. So Twitter's just for, fun. So that's really the only place you're going to find me. My handle is Finance Hippy, spelled with a Y. Follow me if you guys are listening.
Yeah, and you can follow us at Just Swinging It on Twitter as well. And we'll catch you guys next time.
All right. Bye, everyone.
Yeah, see y'all later.